Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We're seeing equities just kind of chop around, but they are holding major three-star support. The S&P responding again from that 43.15, 43.21 area, and it's trying to work higher. We do have the Fed minutes later today. And, we're going to see, it could help us digest the inflation numbers a little bit. How eager are they to move on a pace of taper? Are they going to announce a taper in November? But today's CPI numbers really in line with expectations. And the transitory camp is calling a win. I don't think so. We expected to see more watered down rises in inflation over the last 3 months. The base comparisons were much higher from July, August, and a bit of September as well. What really is going to matter is numbers for October, November, and December. Are we going to see inflation? How much is it going to rise then? We could start to see 6-7% again in the CPI data, in the PCE data. But for now, the transitory camp is trying to call that win because it is watered down with those base numbers. But the good thing is it should lift risk assets. It's keeping a little bit of a bid under S&P, but I would have expected to see the market react a little bit more enthusiastic. You are seeing the tech, different sectors within tech as well, performing very well. Software is doing good. The number of semiconductors are doing very well. So you're seeing some things turn up very well on reaction of the move today as well, move into treasuries. I mean, you're seeing bond yields come off pretty significantly from highs of the week. We highlighted earlier in this week a big trend line going from the high yield of the year. Big trend line resistance. We are failing on that. The trend line comes on the yield side of it. The prices actually traded through a very similar trend line. So right now you're seeing prices rise and they go and rise into the FOMC meeting here at 1 o'clock Central Time. Overall, though, what is the Fed going to say, and how eager are they going to announce a pace of taper? Are we going to get anything new from these minutes? But remember, these minutes come from a meeting that took place 2 to 3 weeks ago. So with that, we think the CPI number, basically a Goldilocks number, should be a game on for risk assets. We're seeing gold, silver rally, crude oil work off the lows. But the equities, again, not extremely enthusiastic from this number, but we could see a delayed reaction here after the minute. So keep an eye out for that. Now, crude oil. One thing that weighed on crude oil early today was the Chinese trade balance numbers. Imports, I highlighted on the Morning Express, imports fell pretty significantally, 15% year over year, 5% month over month. But crude is battling. It's getting really big, building a nice technical base, 79 to 80 bucks, 79 and a half to 80 bucks. And we're going into the EIA numbers. We're starting to see API later today, get EIA tomorrow. What if we actually get a bullish report for the first time in 3 weeks? That could be a really good tailwind here for crude oil. So keep an eye on that. And then gold, silver, doing some really great things, finally getting out of the ground. And gold out above the 50-day moving average. Silver is testing resistance head on here, 23.20, 23.30. We've highlighted that in the Morning Express, so check it out. But gold, let's just get a close. We should be settling here right now, settling within an hour from now, above the 50-day moving average would be pretty significant. Can we hold it through the electronic close? Still, trendline resistance overhead. We'll highlight that in the Morning Express tomorrow, so make sure you get it. Give us a call. Our trade desk is here at 312-278-0500. Remember, the futures trading involves substantial risk of loss and is not suitable for all investors.